Hey guys, I'm Tim Kotzman here with Mark Hopkins. Mark, how's it going today?
It's going pretty good. How about you?
I'm doing well, thanks. Do you want to start with telling us about your background and your journey to Bitcoin?
Sure. Yeah. So uh, I'm a jack of all trades when it comes to tech and crypto. I got started in the Bitcoin scene back in 2011 when I was working as primarily a journalist. I founded an organization called Silicon Angle, has a TV show called The Cube that still exists. And one of my buddies, who happened to be, ironically, a VP at Bank of America, and I were hanging out late night at a coffee shop, geeking out on nerd things. And he's like, "Hey, have you heard of this Bitcoin thing?" And I had not. And after a little bit of him trying to explain it to me and me not getting it, he's like, "Hey, you got your laptop there. Why don't you install the wallet? You pay for dinner and coffee with your money, and I'll give you some Bitcoin to play around with for my half." And that was how
Hmm.
I ended up going down the rabbit hole.
Do you want to tell us a little bit about your experience in the 2011 timeframe as an OTC dealer?
Yeah. So, I mean, I guess 2011, 2012, it didn't take me long to kind of get into the scene. I probably maybe, a couple weeks of playing around with it, and it became something that I was pretty familiar with, or pretty well ensconced into. And then I decided to list myself on local Bitcoins to kind of connect with a community at first, really. I mean, there was no real meetups at that point or any other way to connect with fellow Bitcoiners. So I just put an ad out where I was working in a TV studio, much like this, internet TV studio. And we, we just have random people come in and buy and sell, all kinds of folks. It was a great way as a journalist to have a finger on the pulse of the types of people that were utilizing Bitcoin and what they were using it for at the time. And then, over the years, Bitcoin waxes and wanes in popularity. And it wasn't really until I would say 2015, 16, 17, where Bitcoin started uh, kind of becoming popular enough that selling OTC was like a significant income stream rather than something of just someone, a way to meet people, and became part of the business line of consultancy agency that I was running at the time. And so we kind of stepped up in the world and started doing stuff that way. And there was different bull and bear runs during that period of time that either made it a focus or not a focus of the business. It was in 2020, after I sold my agency and I was kind of figuring out what my next thing was going to be, that I was pretty much refocused on OTC as a full-time kind of position. A lot of my clients were like family offices and just local community members and stuff like that. But I did advertise on like Paxful and local Bitcoin. And I mean, again, a great way to meet who's out there and what they're up to, what they're using Bitcoin for. And then the saga of what you probably know about occurred in late 2021, I think. Yeah, I think that's right. Uh, and the whole different story. Yeah.
And what are you finding yourself up to these days?
These days, I am running marketing for Threshold DAO, which, if you're not familiar, they are a primarily Ethereum-based DAO, but but their product is chain independent. They The primary product is tBTC, which is the only truly decentralized Bitcoin derivative product. Chain independent, allowed to the technology that we create powers tBTC, which is traded on a variety of Ethereum L2s, Ethereum mainnet, Bitcoin L2s like Bob and Mezzo and whatnot. So it's a fun project to be a part of, and a good place to hang my hat for now.
I guess I'm not too familiar. How many um, L2s would you say are on Bitcoin at this point, or that you're aware of?
How many Bitcoin L2s are around? That's a great question that I'm not entirely my focus has been on the Ethereum ecosystem, uh, probably since 2022 or so, 23 maybe, in terms of like where I'm writing software for and what projects I've been playing with. But out of the corner of my eye, I can think of maybe like 4 or 5 different L2s. I'm certain there's far more than the ones that I know about, though.
Yeah, even the ones you mentioned, I'm wasn't familiar with, and I mean the Lightning Network is probably the only one that I could say off the top of my mind. So I'm just curious.
Well, like the Taproot and the Taproot upgrades, and the additional kind of like things that have enabled ordinals and whatnot have also given rise to the Bitcoin DeFi ecosystem, which is it's interesting to watch evolve. It's not. I don't expect it to ever rival maybe like some of the other uh, to, Turing complete, blockchains in terms of traffic or whatnot. But I do think that it is an interesting field to watch in terms of adding functionality to Bitcoin. There's absolutely always going to be a use case for people that don't want to leave the Bitcoin ecosystem, but yet want to take advantage of those extra features.
Hey guys, today's episode is brought to you by Stampseed. I would just recommend that you go right to stampseed.com and check it out for yourself. I've held it in my hand. It's a titanium seed phrase storage device. This thing is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount on the entire website. That's TIM15. What's your view on all of these institutions now having, these exchange traded products and, corporations putting Bitcoin on their balance sheet as a treasury strategy? I mean, from your background and your seat, what's your view on all of that sort of more institutional adoption now happening?
I mean, to me, I kind of view it as just another form of layer 2 Bitcoin adoption. Like in any kind of sense of it, like you've only got one true L1 for any Bitcoin derivative, whether that's a centralized ETF style derivative or a like an Ethereum based token derivative, or a Bitcoin L2 derivative, and that is Bitcoin mainnet, right? That's the only true Bitcoin there is. But it's horses for courses. We used to say this all the time when I would cover enterprise technology. Like, not every product is going to fit every use case. And I'm never going to be able to teach my mom how to properly secure a 24-word mnemonic passphrase. Like, it's just not something that her brain is she's in her late 70s, and that's just not something that she's apt to pick up at this stage in her life. Maybe she will. I'm not saying my mom's not, intelligent or anything, but that's not where her gifts are. And it's a totally different paradigm than anything she's ever had to deal with in her life. She's not thinking about, the future of money as an individual. She's just thinking, where is a good place for me to park my cash as I enjoy my retirement? And for her, it's probably going to be some sort of ETF product that's centrally traded that maybe has some Bitcoin exposure. So, and to that end, it's just another L2 to me.
How do you find yourself thinking about the different market cycles, bear markets, bull markets, with these, institutions? It just seems like more and more kind of, are we going to kind of just blaze into some sort of hyper Bitcoinization, or is it still going to kind of look like some sort of 4-year cycle? Or any thoughts on that?
That is a great question. And I've actually got, I haven't published on this yet. It's still kind of a thesis that I'm still kind of percolating all the details on, but it does take a lot of reference from my time as an OTC person. the big answer to that, the general answer to your question is like I don't even notice the cycles anymore. I'm just so deep into it. Like 90% of my capital is tied up into some sort of on-chain activity at any given point. Like that even including real estate. Like I don't even have like anything that I've got is either in a stable or it's in, Bitcoin or Ethereum or some other DAO governance token that I'm involved in. I don't really keep more than a couple $1,000s at any given point into a traditional bank account. I've got a retirement account, but that's about it. Like there's some stuff there that I use for tax deferment purposes or whatever. But other than that, so like as I said, so like at that point, like I've seen so many cycles, and I'm inured to the volatility. However, I think we are people who analyze these cycles now are counting on some factors that are fundamental to the market that no longer exist, that heavily influenced what were bull and bear cycles previously. So, like I said, when I off the top, when you said why did I get into ODC, it was as a journalist. I want to know who's using Bitcoin and what they're using it for and how are they using it. And that has shifted dramatically over the last several cycles. The one thing that has been the shift, the biggest shift, is the shift from transactional use, remittance, or just using it as a form of currency to as a reserve asset like gold or a savings asset. I would say when I first got started in OTC, it was 95% currency, 5% savings. And you start looking at like 2015, 2016, it's still like 60-40 currency versus reserve. And when I stopped doing OTC in 22, 23, I would say it was closer to 80-20 in favor of reserve versus currency. What that means is, and first of all, the reasons behind that is your day-to-day users in the early days were people that were either primarily libertarians that were looking to early adopt something, people of a libertarian bent or anarchist bent, that just wanted to try something new and they had a technology background, and Silk Road people, right? Those are the most common use cases in 2011, 2012. Then you move over to like 2015, 2016. You've got a lot of business use cases that involve like, I want to have exposure. I want to try alternative remittance options, like people that did a lot of business with China, like Chinese manufacturing or something like that, got tired of having their bank account shut down. So they would buy Bitcoin so they could interact directly across the chain. That was a fairly common use case at the time. And then, but another major use case that rose and fell from 2014 to 2021 is sex workers, like cam girls or massage parlors or places like that. They were essentially debanked due to choke point 1.0 regulations, and they were using Bitcoin primarily to pay for online advertisement. That was, tens of thousands, if not hundreds of thousands of users nationwide in America that were hitting Bitcoin ATMs and local Bitcoin OTC dealers daily for $20, $30 transactions so they can pay for their $20 or $30 ad spend for the day. And then from, I would say, 2019 to 2021, you're pretty much your only option for getting into Ethereum or any ICO or any altcoin that you wanted to get into. You had to buy Bitcoin first to change it into something else, right? So my point in mentioning all this is Bitcoin was like the barrier reef for the entire crypto ecosystem, right? It was, if anything was happening at all in crypto, Bitcoin was your canary in the coal mine. Is it up or is it down? That is no longer the case because of choke point 2.0 regulations. We no longer have a thriving OTC market. It's no longer easy for those sex workers or any other debanked individuals to have access to cryptocurrency. And then secondly, there's a ton of digital first based, crypto buying tools, crypto.com, coinbase.com, Cash App, that allow you to buy into Robinhood, Venmo, PayPal. You can buy whatever crypto you want natively for the most part. You don't have to bridge it from Bitcoin through something else into whatever it is you're wanting to go to. So all that to say, a lot of people still adhere to this old model of like Bitcoin rises, then 5 days later you've got like an alt rise, and then if Bitcoin is going to do this, then Ethereum is going to do this, but later that's not. Or if something is happening in the Ethereum ecosystem, there's a second order effect of Bitcoin is going to buoy upwards. And these things are no longer the case, and haven't been for a couple of years. And still a lot of analysts are putting stock into those old conventional theories.
When you're talking to someone about Bitcoin or any other digital asset and they really haven't had any exposure to it, are there any resources that you kind of point them toward, or what does that process kind of look like?
It really depends on what their application is. Like, what is it they're trying to do? Who are they? If they're trying to save, because they're trying to use it as a hedge against traditional finance, I send them to resources like traditional educational resources that have been around since the birth of crypto, like Andreas Antonopoulos's book on, wallet management and, basic concepts like what private keys and public keys are and how to manage a multi-sig wallet. Like, there's been a lot of family offices that I've guided through that process that literally use paper wallets as their cold storage, because it's one of the most ironclad technologies, even though it's one of the oldest in the business. Then there's like, if it's just like someone that's going to be a retail style user, I try to guide them towards some of the more user-friendly wallets that exist. For years, I used to guide people towards like wallets like Coinomi or other Android wallets. These days, I feel like Coinbase has a pretty decent consumer product. I feel like not the custodial wallet, their non-custodial wallet. Rainbow Wallet is really good as well as a multi-coin solution that really guides people through the process of progressive decentralization, progressive securing of your assets, of your keys and whatnot. It doesn't just dump you in head first, like, here's what a private key looks like, and they feel like they're swimming in the matrix code or something,
Where can people find you online or otherwise, and are there any other topics that you think would be important for us to touch on today?
Sure. Yeah. No, I'm very active in Threshold DAO. I'm active on Twitter at RIZZN. I feel like there's an interesting conversation to be had both around the stuff that I do day to day, and if you wanted to touch on my legal drama, I'm happy to go into that topic as well too. I
didn't want to push you on it, but you have the floor.
Yeah, no, I'm totally open to talk about whatever you want to talk about. I'm completely transparent about what happened because I feel it's important for people to understand. And for those of you who don't know what I'm talking about, I was like I said, I was an OTC dealer for many years. In 2021, late 2021, I was raided by the FBI because one of my clients was a victim of a Nigerian catfishing money mule scheme. And they had assumed at the time, I guess, that I was the kingpin of it. They raided me. They interrogated me and my family for several hours, and then obviously discovered that I wasn't running a Nigerian scheme of any kind whatsoever, but they had to make something stick. So they found that I had not filled out a piece of paper with FinCEN, something that had a new piece of required registration that you have to do if you're going to do peer-to-peer transactions, and sentenced me to a year in the federal penitentiary for transacting Bitcoin peer-to-peer. Which, by the way, and the reason why I bring this up, I feel like it's important for everybody to understand, is if you are going to interact with Bitcoin in a peer-to-peer way, and you're going to do so not anonymously or pseudonymously, pseudonymously, you are at risk of falling afoul of the feds in the same way that I have. And this is why I've been so active in pushing forward things like Tom Emmer's DeFi Regulatory Certainty Act, which would decriminalize peer-to-peer transactions. But if you do not register with FinCEN and you spend $5 on a coffee with Bitcoin, you're technically guilty of a felony that could put you away for up to 5 years. They don't rigorously enforce that, but because of choke point 2.0 agendas within the DOJ and other like other organizations that regulate finance in America, they do selectively enforce that with folks that are high profile enough. So it's definitely something to be aware of and something that we should be lobbying to decriminalize, in my opinion.
Would you mind walking us through a little bit of that process? The question that comes to my mind is, when you say up to 5 years, is there a kind of a minimum and maximum? And did the 1 year in your case, was that more on the lenient side according to how all that's set up? Or can you walk us through that a little bit?
So it really, really, really depends on your jurisdiction and your judge. And, you know, the DOJ side of things as well. I had a very vindictive, career-focused AUSA prosecuting me. He left my case in the middle of it to go take a job at a big law firm lobbying in the crypto industry. So he was obviously 100% about career advancement as he went up again. He went up against mostly crypto crimes and used my case and several others as a way to advance his own career. But these are systemic problems with, you know, American criminal justice system at any level. Specifically, when it comes to 18 USC 1960, it is a free form to fill out on FinCEN's website if you are going to be on the sell side of a Bitcoin peer-to-peer transaction. You have to adhere to all the same rules and regulations that a check cashing service or a bank does when it comes to reporting to the government. So you have to keep perfect records of everything, but at different cell levels. There are required pieces of paperwork that you have to file with FinCEN. So above 5,000, 7,500, and 10,000, you have to file a certain type of piece of paperwork with FinCEN to report those transactions. And I was keeping all the paperwork internally just because I felt like that was going to be coming up at some point in the future. I just wasn't aware of this regulation. I just was not filing those things with FinCEN because I wasn't aware of the obligation. I offered to go into retroactive compliance, which is statutorily allowed by 18 USC 1960 and the guidelines set forth by FinCEN. They declined to allow me to do that, which is at their discretion, and went ahead to prosecute me anyway. The judge, they were asking for 2.5 years on my sentence. The judge, for a variety of reasons, gets into a bunch of details on the proceedings, and thought that I was ridiculous that I would have to spend that much time, sentenced me to 15 months. And then due to like good behavior and some other federal credits that you can get inside the system, I was able to get out in about 11 months. So that is the like very abridged version of how those legal proceedings went. The exposure that you have and what is likely to happen is anybody else and many of the other people that I was actually locked up with that were locked up under the same statute is they will threaten you with a variety of penalties, including like conspiracy to commit wire fraud or money laundering and a bunch of other things that can carry 30-year sentences. And they'll say they'll stack those sentences so you can be in prison for up to 60 or 90 years, you know, on something. And then they go, but if you sign this plea deal, you'll only be out in 5. You know, and then it's up to your lawyer and the process to try to negotiate that down further through a variety of ways you can do that. But that's typically how the process goes. I was locked up in Beaumont, Texas, in a federal facility with several other Bitcoin ATM operators, a couple of OTC guys. There was about 4 or 5 of us in a facility that had about 500 people that were all for the 18 USC 1960, not filling out a piece of paper.
And what was your experience when you were there for the 11 months or so? Was it just pretty straightforward, no drama sort of year, or?
Well, I mean, yeah, it's a camp, so it's minimum security. So the amount of violence is fairly minimal there. The amount of like human rights violations is fairly minimal in a camp compared to some of the other higher security facilities. It was interesting. The first day I was going through, they call it R&D. It's receiving and departures department. The R&D officer, I'm sitting in the hallway and I'm sitting next to this other guy that was there. I'm just trying to make a friend and talk to him and figure out like, hey, what are you in for? What are you in for? And then I hear someone yelling out down the hallway, hey, Dr. Bitcoin, get the bleep in my office. And he comes in there and I come in there and he's like, I'm looking through your paperwork here. You must have had the worst lawyer I've seen in my 30 years of being an R&D. You're in here for selling Bitcoin? And then it kind of turned into like a Shawshank Redemption type way, because over the course of the year that I was there, he brought me into his office several times to help him balance his portfolio and make crypto investing decisions. He got me signed up to like almost immediately got me signed up to teach classes. They have a personal finance class that people can take to get time off of their sentence. And he had me in there teaching personal finance and cryptocurrency to the other inmates. And so I was literally being paid by the federal government to educate people on what put me in prison, for sure. So like it was a clown world situation from day one.
What was the cross section of individuals that would attend those finance classes that you were teaching?
I would say it was predominantly the white collar folks, but not exclusively. I would say, like 60% white collar folks that were just like interested in cross training and learning about a sector of finance that they didn't know. And then like a good, 40% of like folks that were there for a variety of other things, stuff that you'd expect, a lot of drug crimes guys or folks that were, there's a lot of people in there for conspiracy on drug crimes, which is essentially people that knew about like a drug ring but didn't report it to the cops. Or there's a lot of folks, especially in South Texas part that I was in, which were coyotes, people that were just got caught driving illegals over the border. They usually have short sentences. They're usually regular people. And so a lot of quote unquote regular people were interested in attending the class and learning about crypto. Most folks that were from that 40% segment are just like, look, I'm going to go out. I'm going to be a normal person. I'm getting out of crime. I just want something that I can understand that will help me essentially not be victim to inflation, save money, and not have my money seized by the government.
Is there anyone that comes to mind that might be the most interesting or unexpected person that you met?
Yeah, there's a guy, I won't mention his name. There's a guy that who was, I'm trying to see, I want to describe what he was about without getting too much detail. Because there was a lot of folks that are locked up that have access to cell phones, and there was a group of folks that were already, trading meme coins and whatnot while I was locked up. And there was a couple of guys that were involved in, I'll just say there were drug crimes, because that's a very common thing. I felt like they were unfairly targeted, but that's up to debate, I suppose. Weed related stuff, which basically, but at the time when they were prosecuted was illegal, but now basically what they were doing wouldn't even be a crime. And they had made literal millions, like and they were like these good old boys, right? They talk with a deep country accent, and like I would not have expected it out of them at all. I just thought they were older gents that were doing their time. And one guy pulls me to the side one day. He's like, "Hey man, I want you to know," and he shows me his like KuCoin exchange balance. I'm like, holy crap, you got that in here? You're doing that? Okay. He's like, I just want you to know I'm a crypto guy too, and you keep me in the loop anytime you hear something good. And it was crazy. There was a lot of like sleeper crypto people on the inside that were, and it's got far more adoption inside the federal system than I think a lot of people understand.
Anyone that you still keep in contact with from those days, or not so much?
Yeah. So there is a group of us. We used, like I said, the personal finance classes. We kind of like gave ourselves a name called Brain Trust. We were just a group of folks that would meet in the library most days of the week and just talk about. We basically cross-trained on different types of trading and different types of techniques and strategies. And a lot of those folks have matriculated out through the halfway house and back out to the world. And we have a couple of Telegram chats where we just talk about stuff and see what's going on in everybody's life and how we can help out and how we can kind of help. There's a lot of crypto people going into the system for various reasons. Some maybe more deserving than others. And so we kind of try to maintain a network that we can be mutual aid towards those folks that are perhaps being victimized by the system.
Anything else that you think would be really important for us to cover today?
Well, so okay, just to button up that topic, if you're into peer-to-peer trading, you need to get up to date. Ask your lawyer about 18 USC 1960 and how you can be compliant with it. You do not want to fall afoul of that. If you want to prevent the rest of the industry from being forced to only interact through intermediary partners like traditional finance, then you need to have your congressman support Tom Emmer's DeFi Regulatory Certainty Act. The short version of what that does is if you're not custodying a customer funds of any type, then you are not classified as a money transmitter. This legalizes pretty much all of smart contract based decentralized side effect of legalizing / decriminalizing peer-to-peer transactions amongst Bitcoiners, Ethereans, any type of crypto user that tries to use crypto as money. The type of stuff that happens in El Salvador is no longer legal in America and hasn't been since 2019. This would reverse that. So that is like, if nobody takes anything away from what I've talked about today, that should be the one thing. The other thing that I think is important to talk to, if you still have time to go into it, I'd love to chat more about the ways that THUSD and tBTC it's a great way to utilize Bitcoin natively in decentralized finance without having to worry about custodial intermediaries. That is one property it has that's unique amongst all the Bitcoin derivatives that exist.
Yeah, absolutely. Is there more to dive into there, or feel free to go ahead.
Yeah. I'll give you the 30,000 foot view, and if you've got questions or you want to dive deeper into a different part of that, I'm happy to do so. The 30,000 foot view here is that you've got the most popularly used Bitcoin derivative is wrapped Bitcoin. It is a product of a company called BitGo. They've recently been in the news because they partnered up with a Justin Sun of Tron affiliated organization that does some of the custodianship in different jurisdictions. Obviously, if you are a Bitcoiner or a fan of decentralization at all, that is a concerning development because Justin Tron is not necessarily known as the most scrupulous member of the crypto community. So that decision with BitGo and WBTC actually was announced my first day on the job over at Threshold, running their marketing department. So I hit the ground running with a lot of interesting fodder in the news to deal with. Threshold's Bitcoin derivative, on the other hand, is a completely self-service Bitcoin product. The vault is spread across many different nodes in the T network. We can get very technical or it can stay very high level, but basically no single individual has the keys to all the Bitcoin in the network, and it's completely self-service. With Wrap Bitcoin, you have or Coinbase Bitcoin, the new Bitcoin product they have, you have to trust an intermediary to secure your actual Bitcoin and then give you that Bitcoin token derivative. It's the same way with a Bitcoin ETF, for that matter. You have to trust, ARK Invest, or you could trust, MicroStrategy to make sure they're doing a good job custodying your Bitcoin. And then you ask permission from intermediary market makers to trade that derivative product. With tBTC, there's an actual bridging technology that's self-service. So let's say you're a Bitcoin miner and you're interested in borrowing against your Bitcoin rather than market selling it. And you don't want to have to, affect the market negatively and, drive down the price. You can actually bridge your Bitcoin from Bitcoin mainnet over to Ethereum or over to like Mezzo or any of these other L2s that support tBTC, and then borrow against it using a smart contract based borrowing system rather than a centralized intermediary such as like Celsius, which, as we know, didn't turn out too well for a lot of Bitcoin miners. And you don't have to trust anybody individual. You have to be able to, sufficiently audit smart contract code or have some of those folks on staff if you want to be perfect with your due diligence. But as long as you are able to verify that the DeFi protocols you're using to borrow against your Bitcoin are legitimate and trustworthy, then you don't have to have any third-party intermediaries, and you don't have to be arm's length away from your actual Bitcoin. It's all essentially in your own custody. You can wind it up and unwind your positions all by yourself.
And that goes right to the ethos of Bitcoin being decentralized.
Exactly. And it I guess if you're a Bitcoin maxi, some of this stuff is new because you're not used to trusting maybe the Ethereum ecosystem or things that are layer twos. But if you're like an OG cypherpunk like me that's been in the system for a long time, you understand the difference between the counterparty risk of a public blockchain versus the counterparty risk of a centralized organization like Celsius.
Awesome. Well, super appreciate your time today. And as we continue down this road that's just going to continue forever, it'd be great to connect with you from time to time.
Absolutely. Happy to do it.
Awesome.